Hello and welcome. You're watching Inside India. I'm Amitoj Singh. We are right now in Goa for India Energy Week. And before we dive into that, let's get straight to the headlines. India and the EU are on the brink of a landmark trade deal as official announcements will be expected later today, but as soon as perhaps this afternoon. President Trump ups the ante on South Korea, saying he will raise tariffs on autos, pharma and lumber for delays in enacting their trade deal. And energy security and securing supply chains in an increasingly fragmented and divided world will be high on the agenda for global energy leaders, policymakers gathering here in Goa for India Energy Week. We'll be speaking to a number of them. All right, let's quickly set the scene. We're in Goa. This is an ONGC facility. We're at the India Energy Week. This is the 4th edition. There are thousands of people expected. We're still early. It's only 8:30 a.m. right here in India. We're expecting that buzz to kind of trickle in. We've been already seeing the energy coming in. We are also focusing on this aspect because there's been a narrative that was sparked perhaps by the Canadian Prime Minister on middle powers, how they need to realign geographically. The pressure now on the US potentially because countries making trade deals between themselves, that's going to be on display right here at Energy Week. We're focusing on that aspect of the Russia factor. The Russia factor because the US narrative has always been that because you're buying from Russia, that's India, you're going to be facing 25% extra penalty. So the total tariff on India is 50%. India is going to be putting out on display out here that we are in a country that has its own energy security top of mind. We don't take instructions from another nation. We are a country that it may, for a bit, change its thought process around energy transition. Hold off on that. Not the eventual goal, but just the speed at which we're getting there and focus on making sure that we as a country have all our energy requirements met, diversifying from the UAE with a recent deal and, of course, and Brazil, South America in particular. Let's get to Dan Murphy in Abu Dhabi and get a clear understanding of what's happening in the markets in oil. Dan, what's happening?
Amitoj, good morning to you. Well, quick pulse check on the market here for you. Asia pretty much in the green today, but the yen really is the story. Japan looking stable, but a stronger currency continuing to pressure the exporters. We're looking at the Nikkei 225 up by 0.25% right now. The yen jumping nearly 3% in the last 2 sessions alone on growing talk of possible intervention here. Of course, that's great news for import costs and inflation, but not so great for Japan Inc. and those other export-heavy names whose overseas earnings, of course, get hit when the yen begins to rally. So dollar yen at 154.27 right now. South Korea also in focus after President Trump said he would raise tariffs on South Korean goods to 25% from 15%, citing delays in approving a trade deal. You can see the Kospi up by around 1.95%. To oil now, and crude is drifting lower with WTI around $60 a barrel. The US ramping up its military presence here in the Middle East on rising tensions with Iran, and no real progress in talks between Russia and Ukraine, keeping a risk premium under prices. Nat gas futures on your screen as well. Earlier, we saw futures actually hitting the highest level since 2022. A major winter storm stateside, knocking out almost 10% of production in Texas and Louisiana. Right now, WTI at $60 a barrel, Brent at 65, and nat gas at 6.67. Gold on the move higher after tagging a record above $5,100 an ounce yesterday. The safe haven still up around 17% year to date as trade tensions heat up. And all eyes turn to the Fed meeting starting today and what Jay Powell has to say under increasing political pressure on rates. And then, of course, there is silver as well, which has been on fire, up more than 5% right now, trading above $110 an ounce. And, of course, at all-time highs earlier in the session as well. We're seeing safe havens shining here, Amitaj, as markets navigate trade risks, rate cut bets, and a very loud macro backdrop as well. It's back over to you.
It's particularly loud with that latest threat on South Korea, and thanks for highlighting that, Dan. We'll come back to you as and when there are more developments on that side of the world. But back in India, the Indian markets, they come online in just about, 45 minutes. GIFT Nifty futures right now indicating a bit of a higher open. The markets, remember, were closed yesterday for the Republic Day. Nifty is opening this week with the potential threat of dropping below the 25,000 mark, and that's going to be a big one, a big surprise, because it was headed all the way to 26,300 just a couple of weeks ago. Geopolitical tensions, rupee weakness, and continued foreign fund outflows did drag the benchmark Nifty down. But remember, yesterday and in the last couple of days, in fact, foreign funds slightly, they were coming back in. But today could see some upside. It will see some earnings reaction and the big event which we're moving to now, and that is the big story for the markets. It is the developments on the India-EU FTA. The reason that's the case is because it could potentially offset at least part of the US tariffs. The two sides concluding talks yesterday, and an announcement could come as early as this afternoon. CNBC TV18's Parikshit Luthra joining us now for the latest. Parikshit, you've been covering this for years. You've been interviewing the top EU officials. I want to just get a sense from you about the surety of this deal and what you can actually tell us by reading through the signals that you've been getting in those conversations with those officials around the red lines. Where is the flexibility? Parikshit, to you.
Well, this deal has been 20 years in the making. Finally, we are close to the finish line. Both sides have concluded talks, and this is the announcement that is going to take place today in the afternoon by Antonio Costa, the President of EU Council, Ursula von der Leyen, the President of EU Commission, and Prime Minister Narendra Modi. They will say that talks have concluded. What happens now after this is that there will be legal scrubbing or finalization of the legal text, which will begin. It could take up to 5 to 6 months. The deal would have to be converted into languages of 24 EU states. Then it will have to be ratified by the EU Parliament. EU Commission will then be authorized to tell Maros Sefcovic, the EU Trade Commissioner, to sign on the dotted line with India's Commerce Minister Piyush Goyal. So this entire process could take about a year. And we've been told by Maros Sefcovic exclusively on CNBC TV18 that he expects this deal to get implemented, get effective from 2027 onwards. Now, in terms of specifics, we've been told by sources that India's small car market will be protected. The interests of Indian automobile makers making cars up to 25 lakh rupees will be protected. EU will get concessions on cars over 25 lakh rupees, and the tariffs on those cars could come down anywhere in the range of 35% to 40%, and there will be quotas as well for electric vehicles too. Moving on, for pharmaceuticals, for India's labor-intensive exports, all of them will get better access to the European market as well.
All right, Parikshit, those are great details. I guess the question has been, we don't know enough about the security partnership, the security and defense partnership that von der Leyen effectively said on Twitter is set to be inked. We also don't have clarity on this other aspect with regards to understanding the climate question, which is the red line that the EU has on environment products coming to the EU from India. What's the color that you can give on that for us?
All right. Speaking about red lines, Amitoj, clearly red lines on agriculture and dairy for both sides have been kept out of the deal. Maros Sefcovic told us that there have been issues which have been holding up the deal for a very long time, and we've decided to leave out those commodities. So you can expect things like wheat, rice, maize, and dairy, which have been red lines for India always in all deals, to be kept out. On CBAM, the Carbon Border Adjustment Mechanism, we've been told that there will be no exception for India, but EU will do whatever it can to help the Indian side make its transition. You also spoke about the Security and Defense Partnership Agreement, which will be inked. Very crucial. It will bring the two countries together in defense industrial cooperation. Both sides will also start negotiations on a security of information sharing agreement so as to share classified information with each other. So we can see closer collaboration of the defense ecosystems of both countries. And finally, there will be a joint comprehensive strategic agenda 2030 with close to 100 undertakings that will be adopted.
Parikshit, fantastic coverage. Thanks so much for that. I'm sure we'll come back to you in a couple of hours because this is going to be the big story of the day. The India-EU FTA, it's been called the mother of all deals, but there's something big happening right here in Goa where we are sitting. This is Energy Week. This is, of course, when India tries to make the point that, well, yes, we are transitioning to green, but at the end of the day, we need to secure our energy needs. And that's why we have with us Dr. Ranjit Rath. He's the Chairman and Managing Director at Oil India, one of the foremost newsmakers when you talk about oil in India. Thanks so much, sir, for joining us.
Thank you very much.
This is a special one for us. I want to start by zooming out of India just for a bit because you don't just have interests here in India. You have interests as far as a country called Venezuela, which has been in the headlines for reasons we all know. I want to just understand, have you reached out to the US? Has anyone you know reached out to the US and said, hey, can we buy some Venezuelan oil?
Well, first of all, thank you very much for having me. It's great to be part of this discussion. Welcome to India. Welcome to IEW 4th edition. Yes, we have exposure in Venezuela. We have about 4% stake in a field in Carabobo, where we are part with the other Indian companies. OVL is the leader of that consortium. The point is, the resource space is so huge that if we are not producing it, that's going to be a colossal loss for the entire globe. So we see a lot of opportunity. We see a lot of possibilities of enhancing production. We see a lot of possibility of enhancing our investment. But for that, we need a bit of clarity. So it's a wait and watch for us as an investor. And we will look forward to having a clarity of permissions, having a clarity of development agenda of the country. And then probably we will jump in.
So you're waiting for the country to kind of give you the direction?
We are waiting for that country, yes.
Okay, yeah, and there are conversations happening.
There are conversations happening.
As I understand. Okay, let me just understand this. Your focus at this conference is about exploration, and you have interests not just in the Andaman Nicobar Islands and around that area, but in the entire economic zone of India. Why is exploration top of line in terms of what you're thinking about here?
To me, it's basically in our country, India, it's the next destination for exploration. If you ask me, Amitoj, it's like this. The exclusive economic zone part of the country, which is about 1 million square kilometer, was lying unutilized, unexplored. During the reform of 2022, government unlocked these potential areas for exploration. We had the bid round OLP 9, where Oil India picked up 40,000 square kilometer of area in the deep water and ultra deep water of Mahanadi Basin and KG Basin. And then today we are part of the OLP 10 bidding round, which is on, and that's going to be the talk of the town in IEW. We not only require acreages for exploration, we also require collaborations with the IOCs and NOCs of the world who has already mastered the art of deep water exploration. As I speak, we have already completed 2D seismic data acquisition in our block for deep water and ultra deep water, 4,009 kilometers. 36% of our 3D seismic is already completed out of 5,000 meter square kilometer. Now, that's the topic I want to deliberate with my colleagues from the world. That's the topic we want to discuss for seeking a collaboration.
When does exploration begin then?
Exploration begins with seismic data acquisition, followed by drilling. So you would do something called an acquisition, processing and interpretation. So that value chain, we would require support or assistance or technological collaboration with the global oil companies.
Okay, but you have partnerships, as I understand, Deepwater Frontiers, partnership with Total Energies, establishing that a petroleum system exists in that area, that basin that we just talked about. I just want to understand, could you link it to any relevance for the entire Southeast Asia region? And I want a timeline. How much time is this going to take?
Great. Something interesting happened when we picked up the exploratory blocks, shallow water on either side of Andaman Nicobar Basin as part of the open acreage licensing policy. Currently, we are drilling the third well. The second well we have established, I'm not saying it is a discovery, we have established presence of natural gas. It was kind of an prognostication which has verified or validated presence of a petroliferous basin. In fact, the south of Andaman, we have got prolific Sumatra Basin, which is gas bearing. The north of Andaman, we have Myanmar gas finds. So we were sure that we need to establish here. Currently, having collaborated with Total Energy, we are now in the process of appraising the potential possibility there. We should be able to tell you a number around the potential and then the likelihood in a year's time.
Okay.
The first reprocessing of the 2D seismic data has already been completed. We are going to do 600 square kilometer of 3D seismic, followed by an appraisal well with the support of Total. That's the timeline.
Wow. So 5 years.
1 year down the line, we'll be able to tell you the potential, and then should there be a major discovery, 4 years to bring it to the surface for production.
Okay. So within 1 year, we'll have some sense of this,
Yes.
effectively. Okay. Talk to us a little bit about critical minerals. That's a, bit of a, not a hard fork, but a soft fork for you. The focus has been that China dominates this narrative. China is a cautious friend at this point in time, but an adversary in the past for India. So I just want to understand, how can India, through companies like yourself, reduce its China dependency when it comes to rare earth?
I would look at from a different perspective. I think the way oil and gas exploration is picking up, in last 4 or 5 years, there has been a significant thrust from the government to enhance exploration in critical minerals and REs. Recently, government has announced the National Critical Mineral Mission. As part of that, the exploration acreage bidding process is on. Oil India, as a natural commonality of our portfolio, we have picked up 2 blocks. One is a graphite vanadium block in northeastern part of the country, where we have our operational existence, and also a potash block in northwestern part of the country. In fact, potash is something which will be an import substitution 100% to India. And we are also participating in global overseas asset acquisition processes. We have already given 3 non-binding offers. So let's see where it goes for. We will get an invitation for a binding offer. We are doing a lot of collaborations. So that's also going to be a discussion point.
So we know that India is catching up. India is on a war footing when it comes to this aspect, but it's way behind. So my question to you is, when do we have something to talk about in terms of catching up?
A timeline has to be set in. The thrust has got 3 varieties of action points or buckets. One is do active exploration, which all of us are doing. Second is the establishing the value chain of extractive metallurgy. Lot of processes and systems are getting streamlined within the country, and collaborations are being sought. The third piece is the converting these metals and materials into gainful use. So all the 3 fronts work is progressing. To me, a horizon of about next 3 to 5 years will be very, very crucial to catch up and to pick up momentum.
And are you getting the technology that's needed for processing? Because that's been the primary question.
Today we are going to have some discussions with my counterparts across the globe in IEW as well.
Are you just making an announcement during this interview?
I'm not making an announcement till I listen and get a comfort from my counterparts.
Okay, but you're moving towards that direction,
Yes.
and we appreciate you telling us just about that. Okay, so the central question has been that India imports 85 to 90% of its oil.
Yes.
Can we reduce that dependency?
Look, India is a growing market. We are growing from an energy point of view 3 times. So the percentage and the primary energy component will remain stable, but the quantum is growing. So I do not foresee a reduction on import dependence on a totality. But then a delta is possible, for which there are 3-4 strategies which is in place. Enhance exploration to enhance domestic production. That's first piece. Second is bring in energy efficiency in our refining process. We are right there right now.
How will you do that? You're using AI, you're using technology. What are you going to do?
Actually, what we do is we are improving on the processes and systems. So that we are creating more value add, we are creating more product out of the residue that is earlier being left over. Third piece is our bioethanol principles or biofuel principle has caught up. Ethanol, we are blending 20% of our petrol consumption. That is a massive success.
When do we switch from ethanol 20 to 27?
That's something we'll have to wait. But with ethanol 20, let's stabilize on that. Fourth piece is we are also kind of spreading our sourcing strategy. Today we are sourcing from 40 countries. And that gives us a kind of supply side resilience. And of course, we have created a strategic petroleum reserves. So we are right there.
Okay, since you said diversification, where is that coming from? Is that coming from the Russia narrative, that where India imports from Russia? Is it coming because of the US tariff? Or is it coming because India just realized this is a new global order?
This is a new global order. To me, it's like this. Earlier, we were procuring in decimal percentage, in one-digit numbers. We picked up to two-digit, three-digit, two-digit numbers. Now we are down in the two-digit number, but it's a commercial world. When you have a bucket of 40 countries to source, you decide with commercial terms.
So buying from Russia is just about commercial terms.
Absolutely. To me, that's how it looks.
Okay, interesting. There is this other narrative. When will India become the refinery of the East? All right. Is it possible? Do you see it happening? What are the challenges? When can one expect that tag to actually stick to India?
In fact, I would like to answer your question on a very nice thing.
Yeah.
Geography is the destiny.
Okay.
India has got 7,500 kilometers of coastline. We sit from the producing and in the consuming markets. Our current refining capacity is 250 million metric ton per annum. Now we are looking at going to 340 to 440 by 2040.
Yeah.
That's not only to satiate our domestic demand, but to become an export hub.
Yeah.
And with the terminals and then the SPMs, offshore terminals for the VLCCs to come in, and then the port facilities for the Suez Max to take the product out is very well placed. So we see that India will be the most important and refining hub of the world.
Okay. I know that Oil India particularly is targeting around 4 million metric tons of crude oil and sustained natural gas volumes in just FY26.
Correct.
The principal geological and operational bottlenecks is a concern, perhaps is something that you think about when you think about de-risking.
Yes.
So the question here is for you, are you trying to take any decisive actions around that de-risking? What are those decisive actions? Because the concerns are around drill throughput, facility constraints, and reservoir performance.
Absolutely right. When we are dealing with mature reservoirs, 50, 60-year-old, the first thing that bothers us, how do we arrest the decline, which is a natural, intrinsic part of any reservoir management? Oil India has mastered that art. Last 3 years, you would notice, we have stopped decline of 10%, but projecting a growth of 2 to 3% on top of 10% decline. That's first piece. Second, we are imaging deeper. We are drilling deeper. Today, we are producing from 5,000 to 5,500 meters. The third is our reserve replacement ratio is hovering around 1. That means while we are enhancing our production, we are also accruing more value or reserve positions. Fourth, which is very important, while we foresee rank exploration is something which is required for a big discovery, near field exploration strategy gives us the money to carry out that rank exploration.
Okay. My takeaway is exploration is your focus.
Absolutely.
But when does Oil India become Energy India? Because that is something that's needed also. Are you delaying it because of the geopolitics?
I totally agree with you. Oil India has already become an integrated energy player. We have got Numaligarh refinery with us on the downstream part, which is going from 3 million ton to 9 million ton. 31st December, we have kick-started the commissioning of the 6 million ton CDU train.
Okay, cool. This has been great. Thank you so much for speaking to us. This is your first interview at Energy Week. We appreciate that you gave it to us. We'll, of course, come back to you as and when there are more developments, particularly after those conversations you have. Appreciate
Thank you very much, and pleasure listening to you and pleasure talking to you.
Thank you so much.
Thank
That
you
was Dr. Ranjit Rath. As we continue our special India Energy Week coverage from Goa, I will also be speaking to Anant Maheshwari from Honeywell on India's energy transition and the impact of geopolitics on the global energy market, technology solutions. We'll be talking about all of that. Stay tuned. Welcome back. We're in Goa in India for India Energy Week, but the focus has shifted a little bit to South Korea because President Trump has put out a post that says that the U.S. will raise tariffs on South Korean imports, including autos, lumber and pharma, to 25%, accusing Seoul's legislature of failing to implement a trade deal with Washington. Trump announced the move on social media, though it's unclear when the higher tariffs would take effect. South Korea said it had not been formally notified. The Kospi in South Korea, though, not feeling the heat from it, up over 1%. It did go down slightly, but then went back up. Auto giant Hyundai Motor did slump, but has pared back some of those losses. Officials in Seoul also say that talks with the U.S. counterparts are expected very soon, even as uncertainty over Trump's tariff policy just continues to rattle global markets. South Korea's Blue House saying its trade envoy will visit the U.S. soon, according to Reuters. Now, still ahead, we'll have much more from right here at India Energy Week. We have the newsmakers with us, so don't go anywhere. We'll be back with that in a bit. Welcome back. This is Inside India. I'm Amitabh Singh. We are counting down to the market open in India. Gift Nifty futures indicating a higher open on optimism from the India-EU mega mother of all trade deals that could be announced later today, this afternoon perhaps. Some big earnings reactions also coming in, including from Axis Bank. They could be something that the market reflects upon. Rupee trading to the downside at about 91.73 versus, of course, the US dollar. Now, I was talking about Energy Week, a big focus for India India is exploration, but at the end of that, it also needs to make sure that it's got the technology solutions that it needs to actually go forward with not just ensuring that it is excavating as much as it needs. Big need for India, developing economy, largest population, third largest potentially economy in about, 2 years, 2028, according to the IMF. Now, Anant Maheshwari is the president and CEO of global regions at Honeywell. Honeywell focusing a lot on technology solutions, not just in India, because it's been here for, 100 years? That's quite spectacular. But also, of course, in the US, where it has now 3 listed companies. To be 3 right now. It's diversifying. It's split into these 3 companies. We'll talk about that in just a bit. But the headline for today has got to be the FTA. We'll talk about Energy Week also. The FTA, the India-EU FTA. You have, significant interests in the EU. I just want to understand, what are you hopeful for? Because we haven't seen the fine print. We only know that 97% or so of the products will potentially be zero tariffed, but the average tariff is something we're still waiting for. Yeah.
No, thank you so much for having me here. So just putting this in context, I think the world is shifting, as we all know, in geopolitics, and supply chains are moving from being large regions to country specific. So in the past, it used to be all of Europe, all of the Middle East, Africa region, the Asia Pacific region, but it's really now countries. And India is therefore very well positioned to capitalize on that trend. The bilaterals are happening in different countries with India. And the EU FTA, I think 3 big things. Definitely around trade, which everybody is working on, both the exports and the imports on either regions. But I think 2 areas to really watch out is manufacturing in India and innovation in India and the EU together. Because that can have a very strong long-term fillip and can impact the world.
What do you mean by that exactly? Because analysts were telling me that for them, the big takeaway that they're looking forward to is investment from the EU coming and perhaps impacting what you just said.
Yeah, so manufacturing already is beginning to take shape in India. In the past, all of the supply chains for the world were geared only from China. There's always been a trend of whether India can come in and take some of that place. We've seen that happen already. We've had this whole movement, what we call East to West, wherein software went from India, the hardware went from China in the past. I think India is positioning now to also have the hardware from India. In electronics manufacturing, it's already been seen with the support that the Indian government has given. And we've seen that happen in the manufacturing plants that we have set up in India. So we see that as an impact going forward. And the bigger one also is the long-term one is the co-innovation. We've always leveraged India as a strong innovation hub, both in the region of software, but increasingly in hardware, and also for pure chemistry. If I take the energy supply chains, there are only 2 places on the planet where we have core research along with the energy players. One is Illinois in the United States, and second is Gurgaon in India. And we've had these pilot plants operating in Gurgaon for nearly 2 decades, and that is therefore scaled to a point where that can also impact with the FTAs that India is striking.
So, go ahead.
So I think co-innovation is a big theme.
I want to tell our viewers something fascinating about Anant. He was not just, he's also led Microsoft India as president and CEO. So when you think about AI technology, generally, all of these aspects playing into the energy conversation and technology, because the technology solutions is what Honeywell does, there's no better voice, perhaps, just integrating those 2 aspects. There's one thing that you can talk about. It's a bit of a controversial subject. At this point in time, what we're hearing is there's flexibility from the EU when it comes to their environmental standards, the carbon aspect. Now, when they make this deal, they'll give some flexibility to India. This red line may just be crossed. We don't know yet. We're waiting for the fine print. But you and your company have become a part of a major coalition backing carbon capture and storage technology, as I understand. So I want to understand, how do you view this environmental concern moving from no way to, okay, maybe a little bit? Because India's argument is, hey, we're a developing economy. You can't put your standards. When you were developing, you polluted, and that was okay.
So I wouldn't be the expert talking about what the geopolitical stance or the political stance on this is, but I can definitely speak about how I see the movement of India in that direction. Today already, for the first time, India has moved in last quarter to have more than 50% of its installed generating capacity to be non-fossil fuel. That's a great indication. It's a very diversified set of sources that India is banking on. There is, of course, renewables, there is nuclear, but increasingly there's the push towards bio-generated fuels, which I think is a unique opportunity that India has, given all the feedstock that exists in India. The other country that I would point out, Brazil's done that very well because they have the feedstock. India very similarly is blessed with the feedstock, and therefore it needs to leverage that capability.
It's very dynamic even now.
It is, and to the point that you were making, we've already announced strategic agreements with NTPC and AM Green on sustainable aviation fuel, on and therefore carbon capture. A lot of those capabilities, we're already doing that. I think a couple of more of them are on the anvil. We should hopefully be able to announce them soon. So there is momentum in India on diversifying the energy sources and truly becoming the power that it needs to be on energy.
All right. You know, there's a cloud hanging on Energy Week on this FTA. There is a conversation that has been started, perhaps best by the Prime Minister of Canada when he talked about middle powers, the threat of geopolitical tariffs. You just heard what's happened with South Korea. Trump's social post going out saying 25% now because you didn't pass it in your legislature. All of this has got to play into what you're doing. And I say this because you're trying to, at the end of the day, create, well, value for your investors, for your clients. So how is your geopolitical footprint adapting to this geopolitical tariff reality?
So maybe I'll use the other cloud that I'm more familiar with, which is the AI cloud, and talk about that, because that has connection to geopolitics also. And I spoke about that last week in Davos. That physical AI is a new concept. Physical AI is really combining all the manufacturing nuances that exist in every region and combine that with the power of IT and create that AI capability. Now, physical AI is likely to land very differently in different parts of the world. If I take 5 top economies, which is United States, China, Germany, India, and Japan, and imagine a car plant in all of those 5 geographies, it looks different, it has different technology, it has different kinds of people skills, it has different kind of environments, products are different.
Within India, they're different. But
so therefore, the physical AI is likely to develop very differently in all of these 5 geographies. The building blocks of that physical AI are likely to be the same. Data, domain, being deterministic. But how they come together and what they create is different. And that is where I think the focus of countries going forward, rather than large regions, which is being driven by geopolitics, is also going to connect with how physical AI evolves in the future.
Okay, but can you explain it in plain and simple terms, how AI is bringing real efficiency to this in India?
So I'll take the example of energy, since we are here in Energy Week. So if you look at autonomous in energy plants, it is already happening. It's not a concept. The car example I took was a concept. But I see autonomous control rooms taking shape in the United States, in Europe, in the Middle East, in Asia Pacific. Great example is what we've done with the Baruch plant in the Middle East, in UAE. It's an autonomous control room that was announced at ADIPEC in December. It's already run its pilot rounds and it's now getting into production scale, which should happen now. They've already run that, and that will basically create efficiencies. It saves energy, it creates better throughput, and delivers the 3 E's that everybody looks for, which is efficiency, effectiveness, and enablement of skills.
What about the L, labor? What happens to labor then?
Enablement of skills.
It does.
So that's a third E, which is enablement.
But does it remove jobs?
No, it is basically enhancing jobs in the skill levels that you can use. Because in the operating world, you need people to actually operate those plants. But now you're augmenting those people with great AI capability and skills.
Okay. I want to go back to my question earlier, that there has got to be a geopolitical tariff-led impact on the company and how it's adapting. You talked about AI, we appreciate that. But is there a way in which you can say that this uncertainty, we are adapting to it, because you have to be adapting to it. So I just want to understand what's happening.
I think I did speak on that point, maybe I'll elaborate it further, which is, in the past, global companies operated with large regions as their operating unit. So there was Europe as an operating unit, Middle East Africa as an operating unit, Asia Pacific as an operating unit. With the new world order that is emerging, you need to focus on countries, because each country could be very different.
So since when have you been doing that?
We've been doing that for at least a couple of years in terms of rewiring our entire ecosystem. But the benefit we have as Honeywell is we started this journey 2 decades back with a very separate economic model around around India and China. The next country where we've implemented that model was Kingdom of Saudi Arabia, which was in 2023. We announced that change. So you can imagine that for 2 years we've practiced this for a while. And now Germany needs to operate this way, Korea needs to operate this way, and Malaysia and Singapore need to operate that way, and so on.
Has there been interest?
Absolutely, we've landed it.
You landed it. Okay, so are you making any announcements that we can know about right now?
I actually made the announcements in January of last year in Singapore in EDB. We announced the COE with EDB in Singapore.
Okay, but nothing for now that you can say.
We'll have some announcements around that SAF and carbon capture because we're in the India Energy Week.
Yeah, fair enough. I'm sure we'll get to that. Okay, let's just zoom into what has been going on with the company itself, Honeywell, because you've become now 3 companies. Aerospace is the biggest one, automation, and of course Solstice, which is specialty chemicals and
right
material
now only done Solstice. I think aerospace is on
the other way. 2 are going to come. We know. Where does India fit into this change? And I say this because it's not clear where the value creation comes when you separate. For you, it's about focus, and investors can actually think about, okay, I'm interested in this particular sector and not the other one, so I can go into this. But for India, how does the value creation actually happen?
So if I just take the focus on India for Honeywell, we've got about 14,000 people in India. We have manufacturing, very strong innovation engine in India. We've got large customer bases, 20 locations. So if you combine all of that, we are deeply present in India for India. I think what changes going forward is how does India impact the rest of the world? And we're going to increasingly leverage and position the capability from India to other parts of the world. The first port of call, of course, is Asia Pacific. It's also the Middle East, where immediately impact is going to happen. We've extended many of our roles based in India, even the leadership roles, to include Asia Pacific already. So that's truly becoming a hub to support a lot of the growth in Asia Pacific.
You're not worried about reshoring concerns because protectionism from every country is on display right now. So if you're going to use India to impact other markets, would that be a problem? But that's interesting that you said Asia Pacific and you didn't say the US.
We are very clear that every part of the world will have to find some form of self-sufficiency, and we are trying to create that. Every part of the world for us operates that way. We work with local leadership in most parts of the world. We have local talent. I think the India strength that we have is local talent. In Singapore and Malaysia, it's the same. We're building the same in Korea and Japan. We're doing the same in Australia.
Okay, that's fascinating. I want to talk about M&A because what you spent 14 billion on M&A just in the last, I think, year. But you now want to be slightly more cautious because you're in the middle of this transition, 3 companies. You also want to maintain that A-rated company tag. Just explain to us what happens with that in terms of acquisitions in India. Will they slow down? Will they become cautious? Because you need to grow fast in this AI space. With AI as, just generally transforming the rest of the world, and India now full steam ahead on AI, even if it was slow in the beginning.
So our M&A is very targeted about the future megatrends. So I'll give you one example there. We took a bet and a pivot on LNG as the transition fuel for the planet. When we were doing that, a lot of people were questioning, is that something real? A few years down, and now a year into that acquisition, it's really becoming a very significant capability because we're the only company on the planet now that brings at the large scale both the entire value chain for LNG, and therefore we become a very significant provider for the LNG projects around the world. And even for India, LNG is becoming that fuel going forward.
Is it becoming that fuel fast enough? Because the question has been that now the focus is shifted to exploration out here at Energy Week, rather than energy transition, to become more focused on clean energy, and that's not India's problem necessarily, you can argue, because the fact is that there's geopolitical uncertainty, that everyone needs to secure themselves when it comes to energy. So I want to ask you as a final question, return of investment, right? Like your clients in India, Indians, how can they think of getting the best out of their money in India when you have this transition happening? Because at the end of the day, you provide technology solutions, and India is slowing down its move from oil dependent, coal dependent to clean energy. So
I think most people around the world don't appreciate the long cycle nature of the energy industry. You may take a decision today.
But is it long or is it slow?
On exploration. Exploration takes time.
Okay.
You have to take a decision today, you'll invest on it, you'll create infrastructure, you'll start getting something out, and then you'll actually get energy. 5 to 10 years minimum. You still need energy during that time.
Yeah.
And that's where I think the transition really comes in, and LNG is going to play that part. So if I just summarize this overall, I definitely believe that in India's energy diversification is going to use many sources, and that's what we're talking about at India Energy Week. India's unique advantage is technology and the cloud that already is a very strong software capability. You combine the two, AI becomes not just a user but a big driver of success.
I do hope that the headlines become less about the potential that has been touted about for so long, and more towards implementation. And
we are seeing that happen.
Okay, I appreciate that, Anand. Thanks so much. That was Anand Maheshwari from Honeywell. Appreciate you joining us and talking to us about everything that you just talked about. Over in China, we're focusing on that. There's presence out here for Energy Week, and there is a China pavilion. But let's just understand what data is coming in December. Industrial profits rising over 5%. Our China reporter Elaine Yu joins us now to break that down. Elaine, has that helped the overall downturn we saw last year?
For sure it has, Amitosh. So industrial profits last year rose 0.6%, and that's reversing a 3-year downward trend. And it was driven by high-tech and equipment manufacturing. And for the month of December, industrial profits were up 5.3%. So that's swinging back to positive territory after a sharp 13% decline in the prior month. Now, equipment manufacturing was the strongest driver of all sectors, according to the National Bureau of Statistics in China, and it saw a 7.7% growth year on year last year. And specifically, high-tech manufacturing posted a 13.3% growth last year, outpacing the overall industrial average. And semiconductors were described as the fast lane, seeing massive gains with the integrated circuits manufacturing up more than 172%, while semiconductor equipment manufacturing was up 128%. So we see Beijing's push for developing domestic AI chips translating into profit growth. Now, small and medium-sized enterprises as well as foreign invested companies also reversed the declines of 2024 to profit growth in 2025. But the mining industry continues to be a major drag, and that was down 26.2% for the year. So this rebound we're seeing can be attributed to China's AI push and specifically its AI Plus policy initiative as well. This countrywide initiative that is encouraging AI diffusion, so more uptick of AI across sectors and to deploy and develop AI in productive ways. So we're seeing this rebound despite weak domestic demand and despite the long deflationary streak that is also further weighed down by the price wars and excess capacity and also factory gate deflation specifically. So we have those a bit of a mixed picture in terms of China's economy. But AI is definitely proving a bright spot, not just for equity markets, but for industrial profits and its economy as well. Amitosh?
Thanks so much for that, Elaine. I'm sure we'll come back to you with much more on China. China is out here. Representatives from China are out here at Energy Week, and that's going to be in focus as Indian markets join the trading day. We'll take a closer look at this aspect, how the market's reacting to the potential news that EU and India will sign an FTA this afternoon, after a short break. Welcome back. This is CNBC. We're watching the Indian markets come online at Energy Week. How two developments are going to shape the market. Any developments coming out from here in Goa at Energy Week, but also potentially when this afternoon there is this FTA that's signed between India and the EU. How will it impact the markets? The Nifty at this point in time down below that 25,000 number. That's the big one. That was seen as a support price. It's down about 0.3%. The rupee also weakening, inching closer towards 92, the record level right now at 91.8. So we're also watching the auto sector. Clearly, Indian auto stocks are declining ahead of that highly anticipated EU-India trade deal that's expected to be signed this afternoon and which could open the Indian market to European car makers. The tariffs on them from 110% could potentially drop to 110%, even though that change will take about a year, maybe plus more. We don't know for sure the transmission of it. At this point in time, the markets, the stocks reacting to that. Mahindra and Mahindra down perhaps the most, 4.5%. And our earnings season is still underway. Private lender Axis Bank posting a surprise rise in December quarter profit, helped by strong loan growth and sharply lower net profits rose 3% year on year as advances jumped 14% on festive demand and tax cuts that boosted consumer spending. Meanwhile, Lawson and Trubro, well, they're expected to report Q3 numbers today. The company is expected to see some strong momentum in the December quarter, helped by healthy execution and improving margins. We're also watching the snowfall in northern India, how it delighted tourists over the weekend, but also brought infrastructure to a standstill. It does happen at this time of the year. But in the U.S., the extreme weather has left hundreds of thousands of households without power and also thousands of flights cancelled. CNBC's travel and transport reporter Monica Petrelli on this story. Monica, what's the latest?
Yeah, good morning, Amatoj. So this storm now passing into the Atlantic Ocean, but really leaving behind freezing temperatures that are expected to last for more days to come. That's hampering recovery efforts both to restore electricity and transportation. We can see flights, though, are on track. They're getting there, at least. Sunday, about 45% of all scheduled flights were canceled, that reducing to around 19% by Monday. Now today, only 1% of flights canceled. However, that's confirmed. We should expect to see that number go up. Now, U.S. Secretary of Transportation Sean Duffy saying he hopes flight schedules can be back on track by Wednesday, but he also talked about how airports are struggling both to remove snow and ice and to get even workers to show up because other forms of transportation also down. Now, the storm is estimated to cost the United States upwards of $100 billion. Now, Bank of America Securities says this could drag quarterly GDP in the U.S. by 0.5 to 1.5 percentage points. Now, we know airlines will take a bulk of this. We can see the market already reacting. The major carriers, we see the stock prices down between 1 to 3%. That's over the past 5 days. But retail outlets and restaurants may fare even worse. Companies like Yum Brands, which operate fast food like Taco Bell and Pizza Hut, down 4% over the past 5 days. But sit-down restaurants like Darden, which has more than 2,000 eateries, from the steakhouse Ruth's Chris to Olive Garden, that we can see shares down 8% over the last 5 days. Now, one company that has seen their stock go the other way, that's Costco, as thousands, in fact, potentially millions of people rushing to the warehouse big box provider to stock up on supplies to weather out this storm. It's back to you.
Thanks so much for that, Monica. That's all the time we have today on Inside India. We will bring you more from India Energy Week right here in Goa, including an interview with the Director General of the World Nuclear Association. We're also focusing on a couple of different aspects, and I just want to take our viewers through that because Energy Week is huge in India, even if the headlines perhaps will be taken over by a potential FTA between India and EU. But in the long run, Energy Week really deciding India's future. It's where the conversations are taking place when it comes to what India is going to do. Geopolitical uncertainty, the middle power conversation. How does India diversify away from the aspect of thinking about, well, we, get in our oil from Russia, we get a tariff penalty of 25% from the US, so we're going to diversify. We're buying oil. India is buying oil from about 40 countries, and that's continuing to evolve and change. In focus during this energy week is a couple of different things. Can India, in the medium term at least, become the refinery of the East? That's a big question. Geographically, it's placed perfectly, and that's going to be something that India and any stakeholder interested in India is going to be thinking about. Additionally, there are two particular deals in focus. It's the UAE to supply India $3 billion worth LNG over 10 years, signed in a surprising visit by the UAE president to India, meeting the Prime Minister. Also in focus is going to be a particular interview that we are doing with the Energy Minister of Canada. You know what Canada's Prime Minister did at Davos, changed the conversation, but we will be talking about the potential announcement of the India Energy near $2.8 billion uranium deal. So keep watching right here on CNBC. Access Middle East is up next.